Hello, everybody. This is Jordan Johnson, one of the owners of M&M Mortgage, here to talk to you about 1099 loans. So, one of the things that we run into in our industry is sometimes we run into a difficulty for self-employed borrowers to get financing to purchase or refinance their homes. Why does that happen, you ask? Well, it's largely because most of the agency products, the Fannie Mae, the Freddie Mac, the FHA, VA, those types of loans, generally how they're going to qualify self-employed borrowers is they're going to look at the last 2 years of tax returns, maybe one, depending on how long they've been in business for conventional loans. But they're going to largely look at the last 2 years of business tax returns and personal tax returns, and they're going to do kind of an average of what the business is showing in regards to their income. Now, most people, when they're filing their tax returns, if they're business owners, they're going to expense out as much as they can against their business because throughout the year they're not paying into federal or state income taxes. They pay those when they file at the end of the year. Okay, so largely they push their income way down with as many expenses as they can to pay less income tax at the end of the year when they do have to file. So because of that, it generally makes it a little bit difficult for them to qualify for a loan because their income is on paper that much lower on their returns. So what do we have? We got some lenders that have what we call non-QM loans. They're also kind of called portfolio loans. These lenders go out and they finance these loans. They service them or they sell them out to a specific group of private investors, and more or less they create additional products available for the consumer. As a broker, we have access to many, many lenders that have non-qualified mortgage loans or non-QM loans, portfolio loans. They pretty much insure the loans themselves instead of selling them out to Fannie Mae, Freddie Mac, or FHA guidelines. So one of the main products we have with them is the 1099 loan. So what does a 1099 loan look like? It's somebody who receives a 1099 is usually going to be a self-employed borrower, a contract worker. Think of someone, a very, very popular one is like an Uber or a Lyft driver. Somebody who does DoorDash. You don't work directly for the company. You're not an employee directly through the company, but they pay you to work for them, largely contract work. That income's not taxed throughout the year again. What they do is they get 1099s from every single one of these outfits that they work through, and then they pull them together and they're going to claim them largely on a Schedule C on their tax returns. They're going to call it like delivery driver. It's not going to be directly through Uber or Lyft or any of these guys. It's going to be largely one just main job that they work, and it can be a pool of 1099s. Okay, but because they're doing that, again, most of the other products are going to potentially write off mileage for, write off auto expenses for. So most of the other products are going to potentially have a tougher time qualifying for a loan. Again, this non-QM world that we have lenders that will take those 1099s, do an average of the last 2 years, and use that income to qualify for the loan. So the benefit of that is more purchasing power. These type of borrowers are out there trying to buy homes. Their income is a little bit higher because there's not expenses against that 1099 income, and it makes it a little bit better to qualify. Downside is these portfolio products are usually a little bit trickier in regards to down payments. You usually have to get at least 10% in to put down on the home if you're going to be buying a house. Usually, like the cash out refinances, some of the FHA conventional products go to 80% loan to value. Some of these non-QM 1099 loans, they usually go to like 75% loan to value. So you usually have access to a little bit less equity in the home, or you do have to put a little bit less, more down if you are purchasing the home. One of the big, 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 big things about them that is nice is if you are purchasing a home, there are no mortgage insurance requirements on any of the non-QM products. Okay, so you're not going to have that additional cost if you're not putting 20% down on a conventional loan. You're not going to have that mandatory cost on FHA that you have um, when you do one of those loans. So even though you are putting a little bit more down, there's a little bit more of a benefit in the fact that you won't have to pay that MI. Okay? But largely speaking, these non-QM loans, these 1099 products, these lenders who do these loans, it makes more options available for more buyers. And if you want to learn more, if you want to see if we can help you achieve your dream of buying a home, or you want to see if we can help you out get out of a tough mess with some of the debts and using the equity in your home as an asset, put yourself in a better position through one of these products that we have, reach out to your favorite broker here at M&M, and we'll be glad to help you out.